The pace, that is, of household debt slowed in the third quarter of this year amid the presence of tougher lending regulations. But the total debt pile continues to inch closer to the 2 quadrillion won mark. Our Kim Do-yeon reports.
The Bank of Korea announced on Tuesday that the total balance of household credit stood at 1,968 trillion won, roughly $1.36 trillion at the end of September. This is an increase of 14.9 trillion won from the previous quarter. While still an increase, it marks a significant slowdown from the second quarter, which saw revised growth of 25.1 trillion won. The slowdown was led by household loans, which grew by 12 trillion won. Mortgage loans increased by 11.6 trillion won, a smaller rise than the previous quarter's 14.4 trillion. The central bank attributed this to the government's debt management measures implemented on June 27th, implemented to tackle rising home prices and a limited number of mortgages being taken out.
The slowdown in the growth of other loans is attributable to credit loans switching to a decrease. And as for whether this is the effect of the policy, well, because credit loans themselves were restricted to within a borrower's annual income, you can see this as being mostly the effect of the policy.
The central bank stressed that its primary goal is not to drastically shrink the debt, but to stabilize it relative to the size of the economy.
First, I would like to state that the government and the Bank of Korea are aiming to gradually stabilize the household debt to nominal GDP ratio downwards, rather than drastically reducing the scale of household debt itself.
On that front, the BOK noted that with real GDP growing 1.7% in the third quarter, the household debt to GDP ratio is likely to fall. The bank expects this stabilizing trend for mortgage loans to continue as the effects of both the June and the additional October regulations are felt in the market. Meanwhile, sales credit, which is mostly credit card debt, rose by 3 trillion won. The BOK attributed this to increased car usage during the summer vacation season, local tax payments, and a general rebound in private consumption. However, the slowdown in total loans masks a surge in debt-fueled stock investment. While bank and other institutional loans fell, loans from securities firms and other intermediaries increased by 3.7 trillion won, about $2.5 billion, amid a bullish stock market. The central bank noted this trend may be continuing as separate October data showed, other loans rising by 1.04 trillion won, while $955 million, partly due to stock investment demand. Kim Do-yeon, Arirang News.